opens it. So, the last key in the bunch opens the lock. So just don't give up hope and implement whatever is discussed today to, add some value to what you're actually doing at present. And I'm sure, things will turn out in your favor in terms of this job opportunity quite soon.
Main issue I also face that it's my five attempt in year final. So I got
Tarun,
a panic call.
attempts don't matter. Let me tell you,
No,
attempts do not matter.
no,
If I'll say attempts do not matter per se, um, I should not say that, but practically speaking, attempts do not matter if the candidate is a right fit.
yes,
So what do organizations see? These big fours and the top 20 firms, top 50 firms, or any firm of decent size pan India. What do they check? They check the candidate should be a right fit. The candidate should be a right fit to the culture. Even if a rank holder comes, even if a rank holder comes, if he is not able to adapt to the culture of a particular organization, he may end up getting frustrated in another 1 to 2 months and may end up resigning then and there.
right.
So, they do not they do not check primarily for attempts. In interview, if you're able to depict that, you're passionate, your subject, you want to build a career in it, then definitely there is a space for you. And if you know now, then in consulting profiles, in top 20, top 50 firms, in the emerging growing firms, you know pan India or even the big fours, consulting profiles are very demanding, very aggressive in terms of
Yes,
working hours. Sometimes you have to work on, especially in M&A tax, international tax, where transactions keep on happening. Transactions do not wait for anyone. If some transaction has to be completed, if some business purchase agreement has to be signed on a particular date, you have been appointed as a tax advisor to the same, you cannot delay that transaction because your client has given you the appointed date on which the agreement of the business acquisition will be signed. So you have to give it your all. So to successfully enable that transaction to be completed. So you got to be a right fit. Do not dishearten yourself, anybody of you, that you have taken multiple attempts. Trust me, if in interview it appears to the interviewer that you're a right fit to the team, you're a right fit to the organization, you will get selected despite the number of your attempts.
actually, in HR call, someone called me for Deloitte India and for M&A test. They asked me how many years attend. So I said my term is five. So they are like, we are not hiring for more than 3. So on that time, I felt like, what is the issue? They have equal knowledge. Maybe attendance is just only numbers. I read more than the
So
percentage.
iska pata hai, you do this. Tell them
Yes.
I took 2 3 attempts in group 1, I took 2 attempts in group 2, so I did not appear for both the groups. So you can um, you can present it to the interviewer that you appeared group wise, and in one group you took these many attempts, in another group you took these many attempts, rather than just saying bluntly you took 5 attempts, which is also not wrong, because I know many people who have been working in big fours, in who passed in around 6 to 7 attempts, or 8 to 9 attempts. They've been working in big fours, they're working in top 50 firms. So fine, if in one case you're saying this has happened, it's okay. It may not happen in another organization's case. So again, do not lose hope, and we can surely keep in touch, and we can surely just I would say, I'm there to to support you, and I'm just a call away. You can message me anytime, and I get time on weekends to interact with the well-deserving candidates like you. And there is no interest vested of mine in this. It is just that I was also a fresher once. I was also, nobody can know everybody in everything on this planet. There is a
Right.
limitation to the human mind. So where I was in my articleship, I suffered the lack of guidance from across the regions, from across the, from across the Indian region. Supposedly, I'm working in a firm in Delhi, so I can only reach the seniors who are working in that firm. I can only reach my network who is, close proximity to me. But let's suppose Harshit lives in Hyderabad or Vadiraj lives somewhere in South India, for example. I may not be able to reach that person because I suffered this. I suffered the lack of guidance across India through this. So this is due to that. I want to bridge the gap between, if the right guidance can come from anybody, it can come from anywhere in the India. It need not necessarily come from your firm, or it need not necessarily come from your friends or your seniors. It can come from anywhere. So we can just, uh, the whole purpose of these sessions is these only. So I think that we have, got we have started getting, people coming in, so we can start.
Yes.
And I'll talk to, all other people who are left at the end of the session. So just tell me if my window is visible, in which the slides are there on M&A tax and international tax and TP.
Yes, it's visible. Yes,
It's
it's
Yes.
visible.
visible. Thank you. Thank you
Yes.
so much.
Yes.
Just a second. Is it visible now as well?
Yes.
Yes, sir.
So mergers and acquisitions tax. So just one more time. The presentation is visible to all of you.
Yes, sir.
Yes.
Sure.
Yes,
So
visible.
Yes.
the mergers
Yes,
and
visible.
acquisitions tax, people who want to enter into M&A tax, they do not have a background, so they do not, have an articleship experience into it. They have, they think they have taken multiple attempts, so it may take, it may be difficult for them to enter into these service lines. Let me tell you, it is not. You just have to have that passion in yourself first. You just have to think in the brain, that you can do it. Trust me, sooner or later you'll land up at M&A tax job. What you can do to keep yourself, to make yourself more relevant, to make yourself at the edge other than the others, despite having no background. Because at the end of the day, you all are CAs with 0 to 1 year of experience, right? Keep yourself updated with the latest deals. Start reading Economic Times. Economic Times, there is a section finance, startup. You know, there are 2 3 pages on these sections. Start reading Economic Times on a daily basis. Whether you enroll it online, whether you do it, you get it at your home. Start reading it. It's very important. For example, Air India. How many of you that Air India, sale of Air India has been in talks since quite long now? You know, something or the other hiccups happen. You just got to know what are the problems which are coming. Is anybody fine in English? Just give me a yes or a no, or you can unmute yourself and give your, view on that.
Yes, sir. English is fine.
Yeah. Okay. Okay. Thank you. So, Air India, what are the hiccups? What are the problems which are coming? You just got to, know why are the problems are coming, what are the tax related problems in it. When I say M&A tax, you got to understand the mergers and acquisitions transaction from the taxation standpoint. You know, you just got to, realize that there are different rules for listed companies and unlisted companies. You think from the shareholder point. What will happen to the shareholders? What will happen to the minority shareholders? What will happen to the majority shareholders? Will these is this merger scheme, or is this scheme of amalgamation in favor of the shareholders or against the shareholders? Think from the point of view that you have to take over a company, or you will be taking over a company. How will you do it? For example, if I want to take over a company, how will I do it? I'll buy the shares of that company from the promoters. I'll buy the shares of the company from the majority shareholders. I'll enter into agreement with them. Just remember this word, agreement. Agreement is one thing, जिसको हम business purchase agreement, we call it business transfer agreement, BTAs, business purchase agreements, BPAs. They are of paramount importance in M&A deals. Think about the assets and liabilities. If you think about the balance sheet of a company, which is, let's say, uh, 100 crore company. So you see the balance sheet first. Balance sheet. Why do you have to see the balance sheet? You have to check the assets which can be taken over, which cannot be taken over. There might be GST credits which are lying in the balance sheet. Can they be taken over? Can they not be taken over? There might be other assets which are of personal use. Can they be taken over? Can they not be taken over? There might be, the balance lying in the gratuity trust, for example. Can it be taken over? Can it not be taken over? Slump sale. Let me tell you, people who want to enter into M&A tax, whatever I'm saying, keep on doing these things for 30 days. I'm telling you, for at least a month. Slump sale is one of the important topics in the interviews of M&A tax, especially when new slump sale rules, Rule 11 UAE, has come in. What does Rule 11 UAE says? Earlier, we used to just, take the full value of consideration, but now the budget 2021 amended section 50B, which relates to slump sale, that the FEOC shall be FMV of the assets and liabilities, which has to be computed in a manner. First you calculate FMV1, then you calculate FMV2, and then you see what, the higher of FMV1 and FMV2, and the resulting figure will be taken as FVOC. So you got to be familiar with these slump sale rules. Sometimes whenever you sit in an interview for M&A tax, first question which comes, have you read Bharat Bijli case? It is a must know case law. If you are going in M&A tax, remember, Bharat Bijli is the Bible to start with. Bharat Bijli case law is the Bible to start with. If anybody wants to, read the case law, I'm happy to share the same case law with you all. Just remember how it has been impacted by the amendment made by the budget 2021. So what is Bharat Bijli case law? I'll tell you in a crux of it. Slump sale. Slump sale, if anybody can, remember, Section 50B requires lump sum consideration. So there has to be a consideration. So Bharat Bijli, what happened? There was shares or exchange. So it was a case of slump exchange and not slump sale. So hence it was held that slump sale provisions do not get attracted in case of slump exchange. But in the budget, in the amendment made by budget 2021, slump exchange has also been included in slump sale. So now this ruling has been overridden by the Finance Act 2021. This is the one important thing, among one of the important things you should know. Another one, demerger and its relation with the SEC units. What is demerger? Everybody knows. It is hiving off or spinning off a division from your undertaking. Maybe it's a SEC unit, maybe it's a loss producing unit, or likewise. Stamp duty, M&A tax and stamp duty. Stamp duty is one of the integral parts in M&A. It is different in each state. which state to choose, which state not to choose. You got to be familiar with stamp duty rules as well. You know what? Income Tax Act says amalgamation, merger, acquisitions can only be done through three types. There are only three types in which these can be done. First is asset sale, which is also known as itemized sale. Why do we say it as itemized sale? Because we choose the assets and liabilities which we want to take over. Business sale is slum sale, wherein you do not choose assets or liabilities, you do not assign individual value to assets and liabilities. Rather, you take over, without assigning individual values to assets and liabilities. You take over the bunch. Share sale. Do not take over assets and liabilities. Do not sell your business. Instead, sell the shares, or for the buyer's perspective, acquire the shares of the target company. Target company, what is the target company? The company which is getting merged, the company which is getting amalgamated, the company which is getting sold. Taxability of AOPs slash joint ventures slash, we also call them consortiums. Brush the taxability. You got to be very hands on with the taxability aspects of AOPs whenever you're going on an interview in M&A tax. Section 47 of capital gains, transactions not regarded as transfer. Amalgamation in the Income Tax Act per se is tax neutral, but subject to some conditions. You got to have a good, knowledge of those conditions. Conversion of company into LLP, there is a financial threshold of 60 lakhs. You should know this threshold, conversion of company into LLP. NCLT, National Company Law Tribunal. Is NCLT approval required in all M&A deals? This can be an interview question. No, it is not. In slum sale, NCLT approval is not required. Be familiar with securities law takeover code in case of listed companies. So you got to have an overview of it. Securities law and takeover code, you got to have an overview. Cross-border mergers, then there comes FEMA. So I am now linking M&A tax with the exchange control regulations, which is popularly known as FEMA. Can Indian company merge with the foreign company? Yes. The resulting company has to be Indian company. Just remember this. Competition law, another important aspects of the interview whenever you're going in M&A tax. You got to understand the definition of combination. There is a concept of appreciable adverse effect on competition, AAEC, in India. You should know this concept. Financial thresholds given in the competition law from the India asset side or the global asset test. There are two tests, India asset test and global asset set. You should know it quite well. I'll share the presentation with you, and you can also ask me questions after this session. There will be a Q&A session as well. Now the exchange control and the FEMA. I'll be linking to exchange control and M&A. You should know the NDI rules. This is non-debt instrument rules. Go on the RBI website today after this session. Type on Google non-debt instrument rules 2019. The first link will navigate you to the RBI site. Read the entire NDI rules. Till the time you're not getting a job in M&A tax, you should not rest. Till the time you're not, getting any opportunity, keep on improving and investing on yourself, because the moment the interview call comes, you cannot do everything in one night, right? You got to have continuous, efforts towards your investment in M&A. So NDI rules, read the entire M&A. Somebody is waiting in the lobby. Let me admit that person. So NDI rules, I was an NDI. Read the NDI rules entirely on the RBI website. FDI. We keep on listening. India received the record foreign direct investment. India has received the highest FDI despite pandemic. What is the meaning of FDI? It is another one of the interview questions. What is the difference between foreign investment and FDI? Is FDI and foreign investment same? No, my friends, it is not same. FDI is primarily equity investments, where foreign investment can be any investment from the foreign. Check sectoral cap. So in FEMA, what is there in which every sector has been given a cap. So recent budget 2021, if anybody of you remember, insurance FDI limit has been increased to 74% now. So 74% can come under the automatic route or approval route. Automatic and approval route is also one of the main things you should understand. As the name suggests, automatic route, you can bring in the money in India without prior government approval. But in approval route, you got to take the government approval first, and then only you can bring the money in India. There are some sensitive factors like atomic energy, defense, where the approval route is required. Also, there are some conditions for the citizens of Pakistan, Bangladesh, likewise countries. What is the meaning of FPI? Foreign portfolio investors. Let me tell you, do not lose a grip on whatever I am saying. These terms you should be very well versed with if you want to enter into M&A tax. I am not talking whether you have done M&A tax in your articleship or not. I am just talking you want to go in M&A tax, you got to be well versed with these terms first. They look for right fit. Any interviewer would look for right fit. Any interviewer would look for whether you know these basic terminologies, whether you know this, a plot is ready or not, wherein they can construct the building, wherein you can get the on the job learning. There's a 10% threshold for foreign portfolio investors. You should know about it. Rules for non-residents. For example, anybody can ask you, can a person resident outside India, PROI in FEMA, invest in limited liability partnership firm? Yes, it can invest, but only in the sectors where 100% automatic investment is permitted. Automatic FDI is permitted. What about investments in Nidhi companies? You should check the prohibitions for this. After this session, what will you do is go to the Google RBI site, NDI rules, read FDI Schedule 1 to NDI, read, check sectoral caps, you'll easily get it. Read the FDI policy. It's very interesting. Investments in Nidhi companies, check for prohibitions. So what happens is, if you know what is prohibited, you'll eventually get to know what is allowed. So there is another concept of capital account transactions, the current account transactions in FEMA. Be very well versed with these transactions, capital account and current account. Another aspect in FEMA exchange control from M&A perspective or international tax perspective, ODI scheme. NDI, when do we use NDI? Whenever the money has to come in India. Whenever the foreign entity wants to invest into India, NDI comes into picture. ODI scheme, when Indian company wants to invest outside. So they're opposites of each other. NDI, when the money has to come in, ODI, when the money has to go out. There are other ODI regulations to it. Similarly, RBI website, ODI regulations, read it. LRS scheme, there are frequently asked questions, FAQs on LRS. What is LRS? Supposedly you as an individual, I as an individual wants to remit some foreign exchange outside India without any approval, without any, unnecessary hassles. There is a limit 2.5 lakhs USD, which I can remit outside India under the liberalized remittance scheme, LRS scheme. Understand the meaning of NRO and NRE. Once you go outside India, once I go outside India, I have to redesignate my savings account, which is right now in India, to NRO and NRE account. I can remit up to 1 million USD outside India from my NRO account. Mind you, LRS and NRO are different. There can be an interview question. What is the limit in LRS? What is the difference between NRO account and NRE account? What is the limit of 1 million USD apply to NRO or LRS? It applies to NRO, non-resident ordinary account. Now coming to international tax. Capital gains is must. The one who does not know capital gains, it's very hard to convince the interviewer that you are going to be a right fit for the team. Every transaction, somewhere or the other, shares are getting sold. capital gains are getting attracted. Capital gains is must. Till the time you're getting an interview opportunity, till the time you're getting a job, keep on reading capital gains. I know it's very basic for chartered accountants who have just qualified, but capital gains, let me tell you, from the long-term capital gains, short-term capital gains, to the period of holding, to the rate of, to the tax rate, to the special rate applicable to them, to the section 47 transactions not regarded as transfer, to the exemptions under section 54, or or henceforth, it's very important and it's a must know to crack the international tax M&A tax interview. Must know. Not in case of transfer pricing. If anybody wants to enter into transfer pricing, he may or she may do capital gains on an overview basis. But if anybody wants to enter into M&A or international tax, capital gains is must. Section 9, business connection, royalty interest FTS. Read the bare act of it. There is a famous Supreme Court ruling of R.D. Agarwal. If somebody asks you, what is the chain which follows in international tax? What is the basic chain which follows in international tax? It is section 9 first, then the business connection, then the case law of R.D. Agarwal, and then, royalty interest FTS, and then section 90, and then DTAA. This is a basic chain which follows, and the special rates which are there in section 115A. Be very confident that you have invested in you. Suppose you just, if you think in your mind now, you're sitting in a bay in in your dream company, in M&A tax team, in transfer pricing, in international taxing. Let me tell you, man, doesn't matter which background, doesn't matter where have you run your articleship, doesn't matter the number of attempts, you will get there. I'm telling you, you'll get there. Keep on investing yourself, but for that you got to work on yourself. You cannot just say sit and just forward your CV and wait for the interview call and just do everything in one day after calling here and there. It is not going to work out like that. Trust me, it is not. You got to deserve the position where if you'll get selected, you also think I've done something to get there, man. I've really done something to get there. Indirect transfer provision. Understand, after the Vodafone case, retrospective amendment, there is a recent update to it in a recent few months. The retrospective amendment has been scrapped. What is the date? Interviewer will ask you the date. 28th May 2012. So the transactions which has happened 20th May 2000, which has happened prior to 28th May 2012, the retrospective amendment would not apply, and the tax which has been collected by the government has to be refunded. So they have also introduced a draft rule 11 UE for the same, wherein a taxpayer has to give an undertaking if his tax has been collected on account of indirect transfer by virtue of retrospective amendment. So after the scrapping of this retrospective amendment, you can file an undertaking in rule 11 UE. You should know all these provisions. But what about the transactions which has happened after 28 May 2012? Indirect transfer provision still applies because the retrospective amendment has been scrapped, not the prospective. This is also one of the catch. There is a 100 million threshold on it. Substantial value should be derived from the Indian assets. You should know it all well. What is a direct transfer? Because there is no term defined in the Indian Income Tax Act, the direct transfer. Indirect transfer is there. Section 9, capital gains, fine. But what is direct transfer? So direct transfer is when a foreign company straight away sells the shares of the Indian company. It's a direct transfer. But what is the indirect transfer? When a foreign company do not directly sell the shares of the Indian entity, but in fact sell the shares of the intermediate holding company, which is outside India, which has a controlling interest in Indian company. So as a result, the shares of the Indian company indirectly gets transferred. So this is the meaning of indirect transfer and direct transfer. What is the direct transfer? It is taxable. Yes, it is taxable. Section 47 again, very important for M&A people, very, very important. In the implications of capital gain on slump sales, section 50B, just brush it by heart. Implications of capital gains on itemized sale. Remember, I told you a few minutes back, there are only three ways in which amalgamation merger takes place in Indian income tax law. One is itemized sale, which is popularly known as asset sale. One is slump sale, which is popularly known as business transfer or business sale. Another one is share sale. So when the shares will be sold, capital gains would be attracted. So again, the capital gains are of paramount importance if you want to enter into M&A international tax. Another important interview question can be on section 79. Section 79 talks about the change of shareholding. Suppose two companies are getting amalgamated. Will you be able to carry forward the losses? Because most of the times M&A happen to take the benefit of the accumulated losses there. So section 79 talks about if after amalgamation, the change in the shareholding of the previous owners, promoters reduces to more than 51% or goes below 51%, you will not be able to carry forward the losses. There has to be minimum 51% of shareholding which needs to be maintained so that the new entity can carry forward the losses. You should remember this section 79. Again, there is a recent news on section 79 on public sector undertakings on strategic disinvestment. It was there in Economic Times 2-3 days back that if public sector undertaking as a result of strategic disinvestment can carry forward the losses, the section 79 does not apply there. The benefit has been given to PSUs also now. Be very well versed with the news. These are all interview questions. Now coming to international tax again. Permanent establishment. If somebody is going in an international tax interview without studying permanent establishment, it's very hard. To be very honest, it's very challenging for that person to justify that the person is going to be a right fit, because the first question from the partner, the first question from the director may be, what is Article 5? Article 5 in every DTAA talks about permanent establishment. What is permanent establishment? What are the types of permanent establishment? There is an agency PE. What is agency PE? It is also known as DAPE, dependent agency PE. What is a service PE? What is a fixed place PE? What is a construction PE? These are all things which you should know. Preparatory and auxiliary activities. Preparatory and auxiliary activities do not constitute permanent establishment. You should understand preparatory and auxiliary activities do not constitute permanent establishment. Formula 1 ruling. You should know this from the heart. Formula 1 ruling, place of disposal test. You may get an example from the partner, from the interviewer, for example, that if you have a certain facility or a warehouse, in another country, can that warehouse constitute a permanent establishment? You got to read Article 5, where there are some exclusions that these things do not constitute PE. So just having a warehouse in another country do not constitute a permanent establishment per se. But again, we have to check the agreement. This has to be an answer. Again, it depends on the exact facts of the transaction. We have to check the contractual agreements between the distributor, between the warehouse owner, and the foreign company. Very frankly speaking, you must have heard in offices, you must have heard in your network groups, P ban jayegi, P ban jayegi, P ban jayegi, P ban jayegi. P will get constituted, P will get constituted. Whose P gets constituted? This is one of the basic questions which needs to be placed thrust upon. Whose P gets constituted? It is always the foreign entity's permanent establishment which gets constituted in India. So if, let's say, for example, any foreign entity, Honda Cars. Honda Cars is a Japanese-based company. Honda Cars does some transaction in India apart from the subsidiary, because subsidiaries do not constitute PE. You all say Honda India is there, so it is a PE of Honda Japan. No, it is not, because Honda India is a company incorporated under the Companies Act, Indian Companies Act, incorporated under the laws of India. Honda India is a subsidiary of Honda Japan. So subsidiaries are not primarily PE, but again, subsidiaries can also form a PE, but we have to go beyond what are the activities which have been undertaking. There have to be independent activities, then subsidiary is not a PE. If subsidiary is also dependent on the activities of Honda Japan, it may constitute a PE, but primarily subsidiaries do not constitute PE. So if any other agency, agency arrangement is there of Honda Japan in India, so PE always get constituted in the source country. Honda Japan is the residence country. PE gets constituted in the source country. And once the PE is constituted, what are the ramifications? This is another interview question. So supposedly PE is there. PE is constituted. Fine. Now what next? What will happen? Now you will say, just listen to my lines very, very carefully, my friends. Now you will say that once the PE is constituted, the profits attributable to India operations. I'm repeating myself again. The profits attributable to the India operations would be taxed in the hands of the foreign entity at the rate of 40% plus applicable surcharge and cess. Remember these lines. You got to understand Article 7. I told you to place test upon one line. Once the PE is constituted, the profits attributable to India operations would be taxed in the hands of foreign entity. Where does this attribution coming from? It is the Article 7. Article 5 talks about PE. Article 7 talks about business profits. It talks about once the PE is established, profit attributed to India operations would be taxed. How do you attribute profits? Rule 10. This is where transfer pricing comes into picture. So if we'll take a holistic view of International Tax Act, M&A, exchange control regulations, and transfer pricing, they're all somewhere interlinked together. And you should very well appreciate this linkage. Meaning of fiscally transparent entities, which are primarily partnership firms, opaque entities, which are primarily companies, royalty fee for technical services. Another important area in FTS which can be asked in the interview is like managerial, technical, and consultancy services constitute fee for technical services. But what is the principle used in the interpretation of managerial, consultancy, and technical services? So consultancy is in the middle. You cannot bring in the consultancy at the end. It has to be read as managerial, consultancy, and technical always, because there is an interpretation principle attached to it. Managerial and technical give the same meaning, give the same color to the consultancy as also. Important question coming in. What do you mean by make available clause, and which treaties have make available clause? Remember this one rule, and you can write this: no make available, no withholding. Some treaties have make available clause. Make available is the service recipient is able to apply, the service recipient is able to apply whatever he has learned from the service provider while he was providing the services in his absence. This is make available. This means the service provider has made available the service to the service recipient. So then there will be withholding. What do we see? Once the PE is established, business profits attributed to India gets taxed at 40%. Once the royalty is there, 10% taxes there. FTS is there, 10% taxes there. What is that? What does this 10% taxes mean? 10% is withholding. You have to deduct. You have to withhold 10% while furnishing 15 CSCB. What is FIS? Acha, by the way, make available clauses in India-USA treaty. So this is one of the classic examples of make available. Classic examples of treaties where there is make available clause. India-USA. If anybody wants to, understand a DTAA better, I would recommend to read India-USA treaty. Entirely India-USA treaty. Start from the behind. Start from the lowest, protocol. There's a protocol which is at the end of the treaty. Start reading from the protocol and then go up. Then what is FIS? In USA, there is no FTS clause also. USA treaty is very interesting. There is FIS clause. There is fee for included services. What does fee for included services mean? Fee for included services is the same as fee for technical services, but they do not contain managerial services. So fee for included services only mean consultancy and technical services. Remember this. Residential status provisions. Many of my friends keep on getting calls in M&A tax, international tax, TP, expat tax, global mobility. The first question, whenever you're going in global mobility, especially or in expatriate, is Section 6. which is residential status. You keep on reading big things, but the interviewer can grind you on the basic thing like section 6. You got to be very careful with section 6. You got to be very careful with exact provisions and read it through the bare act, not the summaries available on Google. Another aspect which you should know is equalization levy. We all know the scope has been broadened by Finance Act 2021. Significant economic presence thresholds just notified 3-4 months back in the month of May 2021. OECD Pillar 1 and Pillar 2. It is one of the interview questions, recent interview questions in one of the top firms. What is OECD Pillar 1 and Pillar 2? G7 tax proposal of a global minimum tax rate of 15%. I have also done a session on G7 tax proposal. It is available on my YouTube channel. You can go and have a look there. Crypto, online gaming, intangibles. You can just make a case study of your own on these topics to understand. If any foreign company is dealing in cryptocurrencies in India, can this activity constitute a PE? Or can this activity constitute a royalty? Can this activity constitute a fee for technical services? You should keep on asking these questions to yourself. Let me tell you, do it for another 1 month. Trust me, you will find yourself at a better place than what you are right now at present, and it will really help you to ace your international tax M&A transfer pricing interviews. Intangibles. It is a world of intangibles. Digital economy है. Intangibles का जमाना है. 1970s 10% intangibles, 90% tangible. 2021 10% tangible, 90% intangible. You got to understand the intangibles quite well from the international tax, and people who are actually want to work in just in transfer pricing, people are coming in now, so that's okay. So transfer pricing intangibles are very important. Tempe functions, DEMPE, it's a very high level function. So they may not ask you if you are a 0 to 1 year of experience, but if you're going for a TP interview after having 3 years or 4 years plus of experience, they may ask you Dempe functions, which is basically related to valuing how to value the intangible. Work from home and PE exposure. Work from home and PE exposure. Again, how many of you know that there is no guidance from the Indian government as of now? Can work from home constitute a PE? Because many foreign nationals are stranded in India. Many foreign, people who work for foreign companies, they were on a travel business visit to India for around 2-3 days. They have been stranded in India due to COVID travel restrictions, but they still continue to work from the hotel premises, from the guest houses. Can they're working from guest houses, hotels constitute a PE? ये इतना important क्यों है? Because once the PE is there, 40% tax on the India attributable operations straight away gets attracted. Indian government has not clarified. There is a OECD guidance on work from home. That work from home cannot constitute a PE because they have classified it as under a extraordinary circumstance, extraordinary situation. COVID is extraordinary situation in that guidance. You should know about it. Another point, interesting point. What is BEPS? Interviewer straight away asks you, what is BEPS? Why did the BEPS come? BEPS is base erosion profit shifting. There are action plans to it. It's an OECD initiative to prevent the profit shifting and the base erosion. What is MLI? Multilateral instruments. Is India a signatory to MLI? Yes, India is signatory to MLI. What is the effect on permanent establishment after MLI? You should be well versed with these concepts. PPT, principal purpose test. You know what? We can deny a treaty benefit if there is found that if there's been found that one of the principal purposes of a tax, one of the principal purposes of a transaction is to arrange a tax benefit. There is a domestic GAR provision in Indian income tax and PPT in the international tax front in treaties via MLI. How is PPT different from GAR? Because GAR also intends to deny the treaty benefit. PPT also denies to, intends to deny the PPT, denies the treaty benefit. It is one of the famous interview questions at a partner level or at a director level. The answer to it is GAR is threshold oriented. GAR applies to transactions where they cross a certain threshold. PPT does not have any threshold of that, of that like. PPT can apply to any transaction. GAR applies to transactions above a certain threshold. Classic example, in case of a dividend 365 days condition, you got to hold the security for 365 days in order to become a beneficial owner in case of a dividend and to take the treaty benefit accordingly. Beneficial owner. What is the meaning of beneficial owner? One of the famous interview questions. Trusts. Beneficial owner gets linked with the trusts automatically. What is trusts? Section 90. Section 90, everybody knows. Everybody knows. It's DTAA. It talks about the provisions under the DTAA or the Indian Income Tax Act, whichever are the more beneficial will apply. So MLI regime has come in. Section 90 has also been amended. You should know about this amendment. Where to get this amendment? How to know about this amendment? After the session, NDI rules, LRS, ODI. After reading them, go on Indian income tax site. Section 90. Section 90 is a very small section, but a very important section for international tax folks. There is a line at the end of section 90 which talks about this amendment. Read it and you can discuss it with me. Again, people who want to enter into transfer pricing. Now, I think Nishtha was there who wants to enter into TP. Let me tell you, Nishtha, you can get into TP. Do not let other people bog you down that you cannot get into TP because you have certain number of attempts, you have not a articleship experience of it. No, they have not seen your future. They cannot say that you cannot enter. They haven't seen their future also. But you do your best. Do not listen to anybody. Transfer pricing में जाने के लिए, understand why did the transfer pricing come? When did the transfer pricing come? Transfer pricing came in Finance Act 2001 to prevent profit shifting by Mr. P. Chidambaram. Famous interview question. If an interviewer will ask you why did the transfer pricing come, you will tell him to prevent profit shifting from the higher tax jurisdictions to the lower tax jurisdictions. My question, or the famous interview question in transfer pricing, is supposedly there are two countries where the tax rates are almost same. India is also a same tax rate, USA is also a same tax rate, or somewhere more or less the same tax rate. How can we say the profits are shifted? Because if I shift my profits to USA, they are also going to tax it at the or more or less same tax rate. If the profits remain in India, they are also going to get taxed at the same or more or less the same tax rate. How can you say that TP apply? How can you say that the profits are getting shifted per se? Now there is a modern concept of value chain analysis. You are to tell the interviewer that this does not happen this way. Risks and rewards has to be seen, which is undertaken by the each entity, and risk and reward should commensurate to the value added by each entity. If Indian entity is undertaking more risk, it should get more rewards. Accordingly, it should remain, it should be left with more profits. If US entity is doing more complex functions, if US entity is undertaking more risk, accordingly the profit should be more in the hands of US entity. Margin calculation, how do you exclude operating items or non-operating items? The answer to it is always include operating items. Methods of TP, the ones you have studied in your international tax paper or in your CA final books, indirect tax paper. Read every method very carefully, very carefully. Cup, people ignore cup. Let me tell you, at one of the big fours, the question was if there are two twin brothers, can you apply cup method there? Can anybody answer this question to me? If anyone of you wants to, answer this. So fine. Two twin brothers, can you apply cup? People read RPM, resale price method. Thank you, Tathagata, for the answer. Two twin brothers, you cannot apply cup. They cannot be compared. Great, Vadiraj. Great, nice. So people read TNMM. People read, RPM, CPM. They tend to forget cup. Questions come from cup. It's a very basic conceptual question. Thank you, Harshit. Two twin brothers you cannot apply cup, because even if they are two twin brothers, there has to be some minor difference. And for cup, we all know there is a stringent comparability. OECD guidelines on COVID and transfer pricing. If anybody gets time to read that, must read. It will give you an edge over others. Another aspect in transfer pricing, supposedly a famous interview question. There is no comparable. You are in that business in India where nobody else is there. So how can you see comparable? How can you check the comparable? Accordingly, how will you calculate arm's length price? Because arm's length price is nothing but a price which has been charged to an entity to another entity under uncontrolled circumstances. Then the answer to it is, I will widen my search. I'll broaden my search parameters. If I'm searching for a watch, supposedly my client isn't manufacturing watches or selling watches. I'm not able to get the same type of watch. I cannot surely apply, a cup straight away, because the cup is not successful in this. But I will broaden my search. I may, broaden my search to other devices which are similar to watch. I'll expand my search. I'll do, much more expanded FAR analysis. It is one of the important concepts in DP, functions, assets, and risk analysis. Another important question can be on BEPS Action Plan 13. What is BEPS? We all know it can be asked. BEPS Action Plan 13 is country by country reporting. There is a threshold of 750 million euros. Interviewer can ask you that threshold. Master file and country by country reporting. There are thresholds in the Indian Income Tax Act. You got to know those thresholds. What is the meaning of tested party? How do we choose tested party? We always choose an entity as a tested party who is less complex. Remember that. Again, if you get time, do read about AMP. This is advertising, marketing, and promotion expenses related to intangibles straight away. Do read about them. It will give you an edge in the job interview. For today, this was an overview on how to actually start building your base, building your plot in international tax, M&A, exchange control, and transfer pricing. I'll continue to keep coming up with these sessions, but let me tell you, my friends, do not let others tell you that you cannot, you don't have a background, you have multiple attempts, you cannot go into these service lines, because they all take rankers there. They all take, people who have cracked in the first attempt. It does not happen like that. First of all, you got to win in your own mind that you can go there. But just do not sit idle by just forwarding your CV. Keep on investing yourself. Keep on doing these daily research. Keep on doing these things. Yes, Rachna, I will share this PPT after the session for sure to all the people who have registered for the session. And once again, thank you so very much. I'll open the session for the Q&A. Anybody can, unmute himself, herself, and I'm happy to answer their queries.
Yeah, hi, Yishu. First of all, thank you so much for such an amazing session. Hello?
You're
Yeah.
welcome. You're welcome.
Yeah, I actually wanted to know that for someone like I am interested in the M&A tax profile, and like I wanted to know because I don't have any prior experience in this field. Like I will definitely prepare on the basis of the guidance you have provided. I just wanted to know that for someone who is a complete fresher in this, what is the starting package like in any top, any in any top tax firm that you can expect, like the big fours or the top 10 companies.
So somewhere ranges between 6.5 to 8.5
Okay, okay, okay,
for a complete fresher.
okay, okay. Thank you.
Hi, sir.
Yes.
Just wanted to know from what are the sources from where we should study these?
So Indian Income Tax Act is there. For all the capital gains provisions, your CA panel books are there. Taxman in Tax Sutra, I am not sure whether you guys can have a login. So if you do not have the login, fine, you cannot log in there, and you cannot, there's no point in buying an expensive subscription. You can read Economic Times on a daily basis, side by side. Read the Bear Act on the Indian Income Tax website, and just keep on discussing, whatever material is available on public domain. Do not just read it and mug it up. Try to link it with the Bear Act. Again, M&A is all about transactions. M&A is not a hard and fast rule to, you read this and you're ready for M&A, because M&A is an ever growing and ever, people, keep on learning. At least I can say about myself, I'm a continuous learner here. I'm not an expert. So start with the basic capital gains provisions. Start with section 79, section 47. Start with renowned case laws of Tax Guru. You can, if you do not have a subscription to Tax Sutra or Taxman, Tax Guru is available free of cost. You can read the case laws on, section 47 in on Tax Guru. I when I was in my articleship, when I didn't have subscription of Taxman Tax Sutra, I used to read Tax Guru, and other Tax India forum are there. You can read the case laws and you can, expand your understanding, but starting is very important. You start it, and another 7 days or 8 days you will get used to this, and trust me, um I'll share the PPT. Just brush all the points, and you will be in a better position of feeling confident in your own self while going for the interview.
Okay, thank you.
Hello, sir. I'm Hitesh. Am I audible?
Sorry,
Am I audible, sir? I'm Hitesh.
yeah, Hitesh, yes, you are audible.
Yes, sir. So my question is, actually, I am interested more or less in all the three profiles which you have explained right just right.
Mhm.
I wanted to know about the future career prospects. As if I work for 7-8 years, how my career will go ahead in these three fields.
So see, I would say career prospects are brighter if you keep on working hard. Let me tell you, do not go berserk when, or do not get distracted. Once you think that, I know each and everything in this field, keep on learning. And 7 8 years is a very long period of time. Do not think of 7 8 years from now. Rather, think from 1 or 2 years from now, because there is a famous saying of Bill Gates: people often overestimate what will happen in the next 8 to 10 years, but they often underestimate what will happen in the next 2 or 3 years. So have short term targets, Hitesh.
Yes.
Think from the 1 to 2 or 3 years of horizon. Build yourself, add some value to yourself, because once you are at a fresher level, you get recruited at between 6 to 9, or I'm talking about an average package here. But if you want to grow in your career 7 8 years down the line, if you want to have on a 50 plus or a 30 plus or even 1 CR plus, whatever is the case, you got to add value to the team. You got to add value to the organization which you'll be working, right? So you got to build yourself. You got to invest on yourself in the meanwhile. So believe in investing in your career for the initial 5 years. Do not think about the 7 8 years from now.
Okay, okay, okay. Thank you so much. So one more question, last question from
Yeah,
my side.
yeah.
Sir, what is the basic difference between international tax and transfer pricing? Because transfer pricing is also a part of international taxation. So what are the broad difference in the work we will be doing?
So transfer pricing is more or less on, associated enterprises, international transactions, arm's length price, margins calculation, most appropriate method to be chosen, how to do benchmarking. There is a different benchmarking for interest transactions. There are different benchmarking for another loans. So transfer pricing is more or less arm's length oriented. And let me tell you, transfer pricing is one such field. If you are doing TP in India, you can also think of relocating to abroad some years down the line, because the philosophy of transfer pricing remains the same in every country. So, and the international tax is more on DTAA, more on Section 90, Business Connection Section 9. So there is a difference between the two in this way. TP is ALP Section 92, Rule 10. International tax, TP is a part of international tax. International tax is a bigger term. TP is a part of international tax, though TP is a separate service line as well. So, permanent establishment, Section 9, business connection, royalty, FTS 115A, Section 90, DTAAs, Article 5, 7, 11, 12. These are all come under international tax. Then the profit attribution under Article 7 in Rule 10 comes from the transfer pricing. So, international tax is a bigger term. Transfer pricing is a part of international tax, and this is the difference between these two. And both the service lines are equally awesome.
Thank you so much, sir. Thank you very much.
Vadiraj, I think you wanted to ask something. You unmuted yourself and then you muted yourself. You can ask your question if in case it's there.
Yeah, yeah. Thank you so much, Ishu sir, for this amazing insights. I've got my interview schedules as well. So I just wanted to track down the the benchmark case laws in the transfer pricing discipline. So if you could think of any, I mean, if you could suggest any.
In transfer pricing?
Yes, yes.
Okay,
So that
fine.
I can go through and judgment
Read. Sorry.
so that I could go through the judicial rulings as well. So if any comes up.
Yeah. That's a very interesting question. So go the famous Maruti Suzuki ruling is
Okay.
there for transfer pricing. Maruti Suzuki. Then there is for Honda also another ruling, and Sony. Then there is one ruling, Ericsson's.
Okay.
Then these are some of the famous rulings which you can read. These are very famous, very big rulings, very interesting rulings. You can go through them.
Okay.
But
Okay. Yeah.
if you're going for TP, have your basics quite strong.
Yeah. I
When to
mean.
use CPM, when to use RPM, when to use TNMM, how to
Okay.
calculate margins, operating items, non-operating items. Read about Form 3CEB completely. Go to the income tax site, pull out Form 3CEB, Form 3CEB, read every clause of Form 3CEB. They may not ask you rulings. They
Okay.
will ask you about Form 3CEB for sure. In
Okay.
comparison to the rulings, you can read the rulings as well. It will give you an edge and make your case more stronger. But have your basics at place, like completely at place.
Yeah. Good. Okay. Good. I mean, I've been preparing. I've also gone through YouTube shorts of transfer pricing interviews that were very helpful.
Thank you. Thank
Yeah.
you.
Thank you so much. Yeah. Thank you.
Yeah. Anybody else? Let me check the chat column as well. If somebody has dropped in, Mehak Agarwal. Your question is, if I want to switch from TP to corporate taxation, will it be a good decision? So again, Mehak, what I told Hitesh, the straight answer to you too as well. Do not overestimate what will happen in 8 to 10 years. but do not underestimate what will happen in 1 to 2 years. Whether the decision is going to be good or bad, should not be a question at this stage. Because what do you want to do in your life? There is no, life is not all about corporate tax or TP only. People who are not into corporate tax or TP, they're also doing well and they're also very happy in their own space. So, whether this will be a good decision or not, exactly entirely depends on how will you make this decision to be in your favor. Whether you want to do corporate tax or not, that's one thing. If you want to do it for good package, just a good package, I'm not sure whether you would be able to, do justice to your own self. If you think you're born with a purpose of solving tax problems, of solving corporate tax problems, of, representing your clients before income tax authorities, being a CA, go in corporate taxation, you'll enjoy every day of it. But do you know it better? Every field is good. If I work in international tax, it's good for me. If somebody works in auditing, it's good for him. So it entirely depends on you. What do you want to do in your life? Hitesh, if you could conduct one more session on private equity, it is on my list. It is on my list. I'll shortly plan a session on private equity tax, because most of the M&A tax people do private equity tax as well. Also, one more thing that I would like to, apprise you with is due diligences. Most of the times due diligence assignments also come in M&A tax, wherein you have to, look through the financials, balance sheet, and profit and loss account of the companies, wherein you, prepare a due diligence report, because, if anybody is buying a business, the person wants to be sure whether I'm whatever, liabilities I'm taking, whatever assets I'm taking, is it all worth it? Are there any red flags? Are there any hidden flags which are not visible on the face of the financials, but there are potential risks and threats associated with it? So due diligences and all also is there. So I'll soon plan a session on private equity tax, Hitesh. It is on my list already. Thank you so much for an insightful session. Thank you, Nishtha, for your kind words.
Hello. Sir,
Yeah,
may I
hi.
ask? Yeah. Yeah. Okay. Sir, so my query is regarding, we had to talk few days back. So my query is regarding how is the FS tax field in the Big Four as compared to the M&A tax? Because what I got to know is that M&A tax, what one of my seniors guided me, is that M&A tax would be a very specialized field in the to go with in the beginning of your career. So instead you go into this FS tax field, the financial services tax. Even there you will get to do 60 to 70% of the same work as the M&A tax field, regarding the structuring assignments, etc. So what would be your advice to go, whether to go into this M&A tax field or the FS tax? Because they told me that it will give you a broader horizon in the beginning, in the early beginning of your career.
Hardik,
Yes, sir.
I am assuming you've just qualified few days back, right?
Yes, sir. Right.
So, experiment. There
Okay.
is no harm in experimenting. I would be very honestly I would very honestly advise you that, very frankly advise you that experiment. If
Okay.
FS tax is something which is appealing to you at the moment, just because of the name, let's say, you do not know what's in there. You are
Right.
just listening to, people from here and there, and it is appealing to you, right? You have formed your opinion on whatever somebody has advised you, be it me or be it somebody else, right?
Yes.
Experiment it. Go ahead. There's no harm. There is no harm at all. 1 year for every fresher CA who have just qualified. 1 year is the time to experiment. And this 1 year will teach you a lot. Let me tell you, you will do mistakes. Do not get disheartened if you do not like the job you have chosen. If you have, if you are working in a place you do not like, you may end up resigning 6 months down the line, 5 months down the line. Some people may go into another line. This is not my calling and all. It's all fine.
Mm.
It's all okay. Relax.
Okay.
1 year is to experiment. 1 year is to 1 year is for the learnings. 1 year is for all the things you will learn from your own mistakes.
Right.
Hardik,
Okay.
I think you can go ahead with it. There is no harm.
Okay. Okay. Thank you so much, sir.
Thank you, Tarun, for your kind words. Any other question? Guys, thank you to you all. I express my deepest gratitude to invest your almost 1.5 hour with me on your Sunday afternoon. And I'll keep on coming up with these sessions, and I hope I'm able to add some value, even to the tune of 5 to 10% of what you were before the session. And I hope I'll keep on continuing adding value. And I thank you all to come. And I thank the Almighty at the same time, who has, enabled me to, present myself in front of you all today. Thank you so very much. I am taking your leave. Have a good Sunday, everybody. Take care. Stay safe.
Thank you.
Thank you, sir. Bye.